Basic merchandising example. You could take a look at this as preview for Chapter 18. I'm going to draw you some T accounts, and then we'll process a few transactions. I've made a list of 7 transactions at the bottom of the screen, and we're just going to sketch them into the T accounts very quickly. The owner invested $50,000 in the business, so debit to cash. Credit to Johnson Capital for $50,000. That's transaction 1. Transaction 2, purchased equipment for cash, $9,000. And that was also for cash, $9,000. Transaction 3, paid the rent in cash, $2,000. Rent is paid in cash. Paid some salaries here, $3,000. Debit to salaries expense. Credit to cash. Transaction 5, got depreciation on the equipment. Debit depreciation expense, $1,000. Credit accumulated depreciation for the same amount, $1,000. All right, now we're at the punchline of the story. We're going to buy some inventory on account. This is transaction 6 for $20,000. So you debit inventory, $20,000. And this is on account, credit accounts payable, $20,000. Final transaction, sold 1/2 of the inventory. In other words, we sold 10,000 of the inventory, and we sold it for $18,000 on account. So you're earning some revenue. Debit accounts receivable, $18,000. Credit sales, $18,000. We also have to record our cost of goods sold. And so that'll be in the amount of $10,000. We're selling half of it. Debit cost of goods sold, $10,000. Credit your inventory for $10,000. We could do 3 financial statements, or 4 even. I'm just going to sketch out the income statement. I'll leave the others to you. So we're going to say sales were $18,000. Cost of goods sold was $10,000. So that gives you a gross profit of $8,000. If you look at your 3 expenses, rent, salaries, and depreciation, they amount to $6,000, leaving you with a final net income of $2,000. I'm going to double underline that. Net income, put a $sign top and bottom. And you could also do a balance sheet here quite nicely. Your assets, if you add them up, will be $72,000. The liabilities, there's only one liability for $20,000. The capital is going to consist of Johnson's investment of $50,000 plus $2,000 of net income. So you're going to have $72,000 of assets, which are equal to $20,000 of liabilities, plus $52,000 of owner's equity. And there you have it, very basic merchandising example, and that should remind you of Accounting 201. Thank you.